This is Craig Howgard with your Financial Issues Ag Update. Fundamentally, the market has moved high enough to cover the impact of the reduced corn and soybean acres that were reflected in the USDA's planted acres report. Now traders are going to turn to yield risk. The 6 to 10 day forecast shows below average moisture and above average temperatures, so look for traders to add more risk premium into the grain markets. On Thursday, we saw the corn prices trade lower on a round of profit taking after the recent rally. Weather is going to be key for the next week or two as the crop enters its critical pollination period. With forecasts calling for hot, dry conditions for portions of the U.S.'s Midwest for the next couple weeks, we should see traders try and push prices higher. Weekly export sales were disappointing last week, coming in below expectations at 14.2 million bushels. But in the overnight trade, we have traders reacting to the weather forecast, and as a result, spot corn futures are trading 6 cents higher as I record this. The soybean market rose to levels not seen since late March on decent demand. Prices then turned lower on profit-taking ahead of the long weekend. Weekly export sales were decent, with a good portion of those sales slated for China. In the overnight trade, we have spot futures pushing higher once again, trading up 7 cents as I record this. The wheat market got knocked around on Thursday as we saw beneficial rains in the northern plains, coupled with harvest activity and increased farmer selling in the winter wheats, along with some profit-taking ahead of the long holiday weekend. Weekly export sales were in line with expectations, coming in at 15.2 million bushels. In the overnight trade, we have all three wheat higher. Chicago's up 4 cents, while Kansas City and Minneapolis are each trading a nickel higher. Cotton futures kept their upward momentum going on Thursday, with the December futures finishing up 19 points as they settle at 62.95. Now in the overnight trade, we're seeing that undone with the spot futures trading 20 points lower as I record this. Livestock futures were stronger to end the week. We had August live cattle futures ending the session up $2.10, while August feeder cattle were down 80 cents higher at the closing bell. Lean hog futures were slightly higher, with the August futures closing up 12.5 cents. And Class 3 milk futures established yet another life of contract high, with July futures finishing up 12 points, settling at 22.97. Milk futures are inverted, with the August futures closing at 20.95. The overnight trade were up 2 points. Meat cutout values were all higher to end the week as well. Choice box beef was 6 cents higher as they closed at 205.44. Select boxes were 33 cents higher, settling at 198.76. Pork carcass cutout values were $2.84 higher as they closed at $66.46 per hundredweight. This has been Craig Howgard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.